Tesla is breaking out to a new high of this cycle following today's rally of about 6.9% after better than feared delivery numbers. All analysts were wrong. Now, some of your most bearish firms on Tesla are raising their price targets today. The bears are starting to capitulate, and that looks like we could see a short squeeze or a potential gamma squeeze right around the corner as option activity today remains strong on Tesla. Now, we're getting some other data as well out of XPeng, NIO, Li Auto, and BYD that is helping to boost the sector higher, not to mention Rivian, which is focused here in America. Now, what are the bulls saying? What are the bears saying? What are the analysts saying? And what am I saying about Tesla stock and where Tesla is about to go? But first, if you like to make money, if you want to make more money, if you want to reach financial freedom as quickly as possible or stay up to date with everything happening in the markets as well as with Tesla stock, this is your place to be. We keep you updated on everything. If there's a problem, we're going to let you know first. If there's good things coming, we're going to let you know first. This is your place to be. Hit the subscribe button as well as the like button. Let's get into all of this information. If you missed the news yesterday, if you were enjoying your Sunday, Tesla delivered 466,140 vehicles. Your highest analyst estimate was 455,000 vehicles. The consensus estimate, compiling all analyst estimates together, was around 445,000 deliveries. Nobody got it right. They were all wrong. It paid to be bullish. Tesla stock is up 7% because quite simply, nobody got it right. Everyone was way too conservative with Tesla. Now, you're getting some price target upgrades today. William Steen, one of the most bearish analysts on Tesla, upgraded his price target from $154 today all the way up to $240. This was a huge increase to his price target. Ryan Brinkman, another very bearish analyst on Tesla, he's with JP Morgan. He upgraded his price target from $115 to $120 today. Slight increase. Canaccord Genuity upgraded their price target from $257 to $293. Deutsche Bank increased their price target from $260 to $270 today. And Mark Delaney from Goldman Sachs upgraded his price target from $248 to $275. These price target increase from these few firms has caused the average price target in Tesla to go from $208 per share to $212.73. So you're getting a little bit higher of an average analyst price target for Tesla today. And these price target increases likely to have a bullish effect on Tesla for quite a few more days. Now to the short seller that is losing his ass in Tesla. His article today says Tesla stock only worth $20 based on GAAP earnings from the short seller. Now, Stanfield Capital is the firm that is massively short in Tesla. They go on to say, let me find it. Right here, quote, and as I believe those earnings are artificially high because Tesla deceptively under-amortizes its factories. We should also look at free cash flow, which in Q1 dropped to just $400 million and may soon be wiped out completely. This guy is losing his marbles. In other words, Tesla is no longer a growth company unless you define growth as declining earnings, declining revenue, and declining free cash flow. I think this guy honestly lost way too many brain cells along his journey in life. Tesla has grown deliveries 50% quarter after quarter after quarter after quarter for 7 quarters in a row. Tesla's revenue has grown every single year, exponentially. The curve on Tesla is ridiculous. The profits on Tesla, also ridiculous. This guy is losing so much money, he almost has to say these things. And it looks like Tesla's not coming down anytime soon, at least until we get to Tesla earnings, and that could paint a pretty bright picture as well. I'm not going to cover this whole article. I will link this down below in the description of this video if you guys would like to read this for yourselves, but I think this is really uneducated, unfactual, and quite misleading, so we're not going to get into it here in this video all too much. Because after all, Tesla does what Tesla does. And when they beat analyst estimates to the degree in which we just did, the stock's going higher. Tesla stock is up 7% today, breaking out a new high of this cycle. I've talked about this before, and I know people are going to not like this, but Tesla looks just like NVIDIA. I say NVIDIA, it's NVIDIA, right? The RSI, the chart, everything looks similar to NVIDIA. The RSI was massively overbought. You got to cool down. The stock went down. It really traded sideways for a week and a half. And now the stock is breaking out to a new high of this cycle. And the RSI is just now getting overbought. But it's only at 71. The RSI was at 90 before. So you can rally well over $300 per share from here without the RSI being this big overbought factor that needs to signal Tesla's going to fall. That's quite the opposite this time. You have room to rally from here, especially given the degree of the news that we just got from Tesla. You hit a high today of $284.25 per share. You retraced down a little bit. You're currently trading in after hours around $278 per share, give or take, in between 280 and, $278. It's very volatile, as you should expect from Tesla. Today was also a half day of trading, so Tesla's volume was a lot lower than what you typically see on any given day for Tesla. It's not uncommon to be over 150 to 200 million shares trading hands any given day for Tesla. Today, you've seen 119 million shares trade hands. This tells me that you're probably going to get more digestion of these delivery numbers. People need to figure out where margins are likely to be coming on earnings given this new information. Then you'll get more volume starting on Wednesday, Thursday, and Friday. And that's when Tesla could really ramp up from here and start to break above that $300 level. The option buyers were in full buy mode here today. Take a look at all of these options coming through. A lot of these for July 7th. You got a July 7th 290 call, July 7th 280 call, a 275 call, another 280 call, a 285 call, a August 18th $300 call, more July 7th 280 calls, 295 calls, August 18th 315 calls for $200,000 in that trade alone, a July 7th 290 call for $270,000. They keep going. They literally just keep going. There was a lot of orders today, over 600 hedge fund and institutional orders that got picked up today as unusual. They are unusually bullish today. And this usually means the stock's going higher. We've looked at the option data every single day Tesla has traded recently. Based off of how positive it is, well, you've seen a correlation between that and how Tesla's stock price has reacted. That's why we've been screaming from the rooftops, especially when Tesla dipped down to that 240 level. The stock was going higher. I was making videos about 280 and 300 and potentially as high as 350 then. You're up almost $40 from that just less than a week ago. There's a lot more room for Tesla to rally because I can push back on the short sellers' claim that Tesla's not growing, that Tesla's only worth $20 per share on a GAAP basis. Look at the PEG ratio. I only like to value companies based off the PEG ratio. PE means jack shit. It's all about the PEG ratio. You got to factor in growth if you're investing in growth companies. Tesla is cheaper than all your big tech names besides Amazon. Tesla beating estimates, well, it means more room for that valuation to align with big tech. Big tech's trading at such a high multiple with really no growth or very little growth, around 10% for Microsoft, less than that for Apple. Apple's seeing declining revenues. Tesla's growing at 50% with double the PE. There is a lot more room for multiple expansion with Tesla and for better estimates for earnings throughout the rest of 2023. And that's why Tesla will continue to ramp up higher. Once you're over 350, then you start to make an argument of, is this a short squeeze? Is this a gamma squeeze? But from now until 350, this is all fundamentals, baby. AFS Financial Group LLC buys over 1,000 shares of Tesla in this most recent quarter, valued over $210,000. Kovac Advisors Inc. lifted its holdings in shares of Tesla by 27.3% during the first quarter as well. This amounts to about $5.5 million. Rivian shatters their Q2 delivery estimates. That stock is up over 13% here on the day. Rivian produced 13,992 EVs in Q2. They're still repurposing and retooling their factory, and it looks like their total backlog grew by about 20,000 vehicles from last quarter, and analysts were forecasting 11,000 deliveries for Q2. So they beat that by almost 3,000 deliveries. June EV sales in China surprised to the upside as demand picked up, likely signaling some normalization in consumer behavior and a release of pent-up demand from buyers taking advantage of low prices, said Deutsche Bank analyst Edison Yu, who wrote in a note on Monday. An EV price war is ongoing in China but may be easing. Sales of BYD were a record of 253,000 vehicles in June, up from 240,000 in May and 210,000 in April. For all of Q2, BYD sold 703,000 vehicles, up 27.4% versus Q1. Li Auto delivered 32,000 vehicles, up from 28,000 in May and 25,000 in April. For Q2, Li delivered 86,533 vehicles, well above prior guidance for 76,000 to 81,000, and up from 52,584 in Q1. NIO delivered 10,707 vehicles in June, up sharply from 6,155 in May and 6,658 in April. For Q2 as a whole, NIO delivered 23,520 vehicles in Q2, near the low end of its target for 23,000 to 25,000 deliveries. That was down from 31,000 in Q1. So across the board today, you've seen positive numbers from Li Auto, from BYD, from NIO, as well as from Rivian, and not to mention Tesla yesterday. The EV sector looks like it's on fire and is doing much better than analyst expectations as a whole. As the global economy looks to be plateauing, not quite going into that global recession, you should get better expectations coming for companies such as Tesla and the other names that I previously just mentioned. In other news, ISM Manufacturing PMI came in at 46. Your estimate was for 48. But the ISM manufacturing employment came in at 48.1. You were expecting 51.3, which is better for the Fed's job of slowing down the economy, although construction spending month over month increased almost 1% versus the estimate of 0.6%. And ISM manufacturing new orders came in at 45.6, and you were expecting 45. We are going to have bigger economic data coming out later in this week. On Wednesday, you're going to hear from the FOMC minutes. This is a transcript of the last Fed meeting. You're going to get a little bit more clarity, and if new details come out, it can move the markets. On Thursday, ISM services PMI come out. You're expecting a 50 reading. JOLTS job openings are coming out Thursday as well at 10 o'clock in the morning. You're expecting 9.9 million. That would be down from 10.1 million at the last reading. If that comes in lower than 9.9 million, markets are going to rip. That's one way you can tighten the labor market, is reducing the supply of jobs. On Friday at 8:30 in the morning, that's the biggest set of data, and that is the non-farm payrolls. You're expecting 250,000 additional job ads for the month of June, and the unemployment rate is expected to hold steady at 3.7%. Now, the rest of this week is going to get quite interesting for Tesla specifically. Given the recent influx of bullish options going into Tesla and the short position that is at the highest level in over 2 years, with $24 billion currently sold short, that can lead to a lot of upside this week as well as next week, heading into the next earnings report. I said this before and I'll say it again. Heading into big catalyst, you don't want to bet against Tesla, and these short sellers just learned a very hard lesson today, losing over $2 billion just on today's rally. Tesla's earnings estimates for Q2 are also going higher, another factor that is moving Tesla stock higher. Just last week, markets were expecting 77 cents of EPS for Tesla's earnings. Now you're expecting 79 cents for Tesla earnings. Although 3 months ago, you were expecting 91 cents per share. So there's a lot of room here for expectations to move higher for Tesla's earnings. That's not what you really want to see, because the bar is low right now. So Tesla's going to be able to, I would imagine, exceed these estimates coming on earnings by quite a bit, and that's going to push Tesla stock up dramatically from here. So ladies and gentlemen, that is going to do it for this video. I hope you guys enjoy your 4th of July. Let me know what you are doing down below in the comment section. What do you guys think about this information? Is there something I missed on the day? Let me know your feedback on this. Again, your comments are more reliable than analysts. So let's hear them down below in the comment section. Where do you think Tesla stock is about to go? Again, thank you for watching. If you want to support the channel, link down below in the description of this video for Webull. Sign up, deposit $1, get yourself 15 free stocks, throw a couple free stocks my way. It's a win-win for everyone involved. And if you guys want to come trade Tesla with us live in real time, every time I make a trade, I send out alerts, and there's some cool tools over there. Link down below in the description of this video for the trading community for that one. You guys enjoy the rest of your day, and I will see you in the next one.